So your appraisal came in low? Don't worry, the sky is not falling.
The sky is falling! The sky is falling!
So let's talk about an appraisal. What is an appraisal? It is one appraiser's opinion of price at one point in time from the perspective of a lender. Now, naturally, lenders are risk averse. They're not in the business to lose money. So they want to make sure that they feel good about using their money to buy your home. Now, keep in mind, they want the business. They want the loan. So that inherently means there's ways to work through it. A home's value is determined by what someone is willing to pay for it, not by the appraisal. And that probably sounds counterintuitive, but it's fact. That's why many offers in this market are written in cash. That's why they're waiving appraisal contingencies. And quite frankly, that's why markets go up, because if you only paid what the last person paid, hence an appraisal, markets would never go up and markets would never go down. And if you're thinking about an appraiser, they're a licensed professional by the state. They go through a lot of training. And in fact, most appraisals today, although you're going to watch videos where they say the number one job of the listing agent is to go meet the appraiser and show them all the great comps, most of them are no contact appraisers at this point. And that's because they're not supposed to be influenced by yahoos like me and anybody else trying to tell them how we priced it and why. They're representing the lender. They want to make sure that the asset that they're going to write on is worth what we think it's worth. So again, because the appraiser is licensed, they're not going to risk their license to come up with a price just to make the loan work. So if you think about it, if any appraiser came in, and effectively if all appraisers came in at whatever point in time, your home value should be the home value. And it's based on the standards that they use to determine, the value of the home based on comps, with condition, upgrades, etc. Now, in a market that's moving, especially a market that's on the rise, it's just impossible. Comps aren't going to support rising prices. It just doesn't make sense when you think about it. So if you paid $1 million for a house, just because it's round numbers, and 3 months later you list it for 1.3, that house was your comp at $1 million. It's not going to support 1.3. And these are fictitious numbers, obviously, but you get the idea. If you only paid what the last person paid, the market can't go up. So there are going to be times where there's going to be a lag, and it's particularly when the market is climbing. So where does that leave us? Well, let's see. In this market, we've been climbing for about a decade. In the last 2 years, it's been like a rocket. So the market has been rising rapidly. These are the times when the appraisals tend to come in low. This is going to sound strange, but my coaching to our buyers would be the same that I would provide to you. Just assume the appraisal is going to come in light. The good news is there's options. If you're expecting that it might happen, you'll have had the conversations and understand the steps and what you can do to overcome it when it does happen. I mean, a great example is we could have multiple offers on a listing, all over asking, and the appraisal might come in below asking. We've got 6 or 7 offers. That should be sufficient evidence to show this is what the home is worth, but an appraiser is using a different standard. They're looking at comps of previous sales. So again, in a climbing market, it's hard to get the comps to support a higher price. Now, what's interesting, we're seeing a lot of appraisal waivers right now. So if you're a well-qualified buyer, you might not even end up with an appraisal. That's the bank or the lender coming back and saying, they're well-qualified, we believe it's priced well, we're going to waive the appraisal. If that happens, or your appraisal comes in great, awesome, move on to the next step in the contract. So if you didn't have the appraisal come in where you needed it, or an appraisal waiver, and maybe this is why you're watching the video, you might be expecting that it's going to come in low. Maybe it has come in low. You do have options. The sky is not falling. Work with your lender, work with your real estate agent. They're going to help you navigate this pretty smoothly. Okay, your first option is to renegotiate the contract price. Now, depending on how you structured your contract, it might be unlikely in this market that the seller is going to want to take a new price. And if you've added any kind of language that says you're going to cover up to $25,000, $30,000 over an appraised value up to the purchase price, they're definitely not going to renegotiate. But you'd be surprised. you're probably now 30 days into a contract, 20 days at least to get your appraisal. Maybe they're building new construction and their date has slipped. Maybe they actually want a lease back, or maybe they want to extend the closing 30 days. That might be leverage where you can then offset and bring the price down to get it closer or to the appraised value. Maybe you included furniture in the contract. Maybe they're willing to take some of it back in exchange for a little bit of price. So there are ways you can get creative. In this market, it's harder than it used to be to come down in price, but it still can be done. Your second option is pretty simple. You bring the difference. Is exactly what we just said. So if the appraisal is $15,000 light, you're going to bring $15,000 to the closing table, and then everything remains the same. Your loan product, nothing changes. The third option, and this may surprise you, is probably the one that's the least amount of pain and the easiest to work within. So if you're a well-qualified buyer, if you're bringing 10%, if you're bringing 20% down, this is almost certainly going to be an option for you. Now I'm going to run through some numbers in an example. It's real world, so I'm going to put up the numbers so you can see them on the screen as I talk through them. So let's assume for this example, you're going to purchase a home. You've agreed at a $700,000 purchase price. Now you're going to do 10% down, so you're putting $70,000 down, leaving a loan amount of $630,000. That's a 90% LTV, loan to value. So it's 90% is going to be from the bank, and the 10% that you're putting down, the $70,000 in this case. Now, let's say the appraisal comes in at $665,000. Obviously, that's lower than the $700,000. It's disappointing, it's discouraging, but the reality is the comps just haven't caught up. But it is what it is. So the appraisal comes in $665,000. Now, let's assume you do nothing different. The contract is still $700,000. You're still going to put $70,000 down. The loan amount is still going to be $630,000. This is where the difference comes in. Now, because the bank is going to base the purchase price off the appraised value of $665,000, your loan to value ratio is going to increase. So now it's going to be a 95% loan to value ratio, meaning they're lending you 95% of what their perceived purchase price is, the appraised value. So in that scenario, again, if you started with a 90-10 loan, at that loan amount, you're working on a conforming product with a conventional loan. This is likely not even going to change your interest rate, moving the numbers to the 95% LTV. What it will increase slightly is going to be the mortgage insurance. So in this example, you might be paying $100 a month on the PMI on that 90-10 loan. It might be $140 at a 95% LTV. So, you're going to want to work with your lender in particular in this case, have them run the numbers. You'll get a sense. It's a good way, to not do anything different and have a small change to the payment that you have, but it's an easy way to navigate a low appraisal. All right, the fourth option, and I would just say buyer beware before you consider this option, is to terminate or cancel the contract. Appraisals come late in the process. They're typically beyond any of your inspection contingencies or any of the relevant finance contingencies even, especially in the state of Florida. This is where you definitely need to be working with an agent that understands the contracts so that you know what risk you have, especially if you're considering terminating the contract. Let me just share. In the state of Florida, we have a couple different contracts. On the as-is, which is how we structure most of our buyer contracts, there's actually no protection for an appraisal that comes in low in your finance contingency. There is a misperception that if it doesn't appraise, the finance contingency is going to allow you to basically terminate and not risk your earnest deposit. That's simply not the case. This was a change that was made late last year with the new forms. You have to include an appraisal contingency if you want to have that kind of protection. I would tell you, as a seller, as a listing agent, it's probably going to be unlikely that people are going to accept a contract in a multi-offer scenario that's going to have an appraisal contingency attached to the offer. I share that example in particular about the finance contingency because there's just an assumption in many cases that it's going to protect you, and it's just not. Now, there are some states that still have that protection in place. Florida is not one of them. So again, make sure you got the right team in your corner, or the right lender with a good agent that knows how to navigate these things. I mentioned it earlier, and it probably sounds strange to say this, but if you're assuming the appraisal is going to come in low, you'll already have a plan in place in the event that it does. And it doesn't mean it's going to, but in the event that it does, I shared there's 3 good options, I should say, and another option to help you navigate. So most of these deals stay intact. You end up buying the home that you want, and by the time you close, generally in this market, there's actually comps that will support it, just not in the time that you actually had the appraisal ordered. I hope you found the information helpful. If you did, and you're just wondering why we're talking about low appraisals, check out our market update. It has a lot of insight with where we are in the market and potentially why we're seeing some of these low appraisals.